Bitcoin is emerging as the dominant digital monetary network. Now, when I use the word emerging, not because it isn't, it already is. I just use the word emerging because 95% of the people with the money in the world don't understand that there's a digital monetary network yet. When they understand that the class exists, they'll realize that Bitcoin is the winner. What's driving Bitcoin? Institutions are driving Bitcoin, thousands. The ETFs have actually purchased $5 billion in the last 6 days. There's only $40 million of Bitcoin available for sale by natural sellers every day. A lot of companies are buying Bitcoin. Governments are buying Bitcoin. Bitcoin's going to grow rapidly. Gold's going to be gradually demonetized. Equity's going to grow a bit faster. Real estate about the historic average. Basically, the money supply is going to expand about 7% a year. Some assets are going to stay on that glide slope. Some will slightly outperform it, like equity, like Bitcoin. Some will slightly underperform it.
Bitcoin isn't just an asset, it's a revolution reshaping global finance. Michael Saylor shares groundbreaking insights on Bitcoin's unmatched performance, institutional adoption, and the inevitable shift toward digital assets. As traditional markets struggle, Bitcoin is positioned to dominate, fueled by ETFs, institutional interest, and a red wave of policy shifts that could usher in a crypto renaissance.
All the smart money in the world ask the question, how do I store my money in cyberspace and not lose it? And they kick the tires on 10,000 crypto networks and 1,000 other ideas and 100,000 other investment ideas. And if they liked the idea of put your money in cyberspace in a crypto network, they pick Bitcoin, it's the winner, right? If you're the smart money, you go to where the smart network is. Bitcoin is emerging as the dominant digital monetary network. Now, when I use the word emerging, not because it isn't, it already is. I just use the word emerging because 95% of the people with the money in the world don't understand that there's a digital monetary network yet. When they understand that the class exists, they'll realize that Bitcoin is the winner. 12 out of the top 20 ETFs launched in 2024 are related to Bitcoin in some way. It's obviously eating the ETF market. It's now the 7th largest asset by market cap, 7th. And it's the most widely recognized, widely held, compelling investment asset in the world, right? What's above it? Alphabet, Amazon, Microsoft, Apple, Nvidia, they're all securities in the US. There's no way that a Chinese or a Russian company is going to capitalize on those things. Gold, the best idea in the 19th century, dead money, right? So what do I expect? I think we actually chew through, 1 through 6 sometime soon. Spot ETFs have $90 billion of AUM. BlackRock's ETF for Bitcoin has actually outstripped their gold ETF in less than a year. Gold's been around for 5,000 years. Bitcoin's crawling into all the bond markets. Look at the yields. You can have 64% from Bitcoin, or you could have 2%, 3%, 4%, or 5% for the bonds. Bitcoin is going to take a place in the 60-40 portfolio. Right now, people talk about 1 to 3% allocation. That's going to move to 10 to 20% allocation as soon as people get their hands around this. I don't think it'll take very long. Lots of entities buying Bitcoin. Now 2.5 million Bitcoin held by ETFs, countries, private companies, public companies. What's driving Bitcoin? Institutions are driving Bitcoin, thousands. The ETFs have actually purchased $5 billion in the last 6 days. There's only $40 million of Bitcoin available for sale by natural sellers every day. A lot of companies are buying Bitcoin. Governments are buying Bitcoin. Back to our map of assets, I'm looking out over the next 21 years. What's going to happen? Well, I assume technology is going to continue to advance. We're going to harness AI. There's going to be a lot of incredibly valuable companies. Bitcoin's going to grow rapidly. Gold's going to be gradually demonetized. Equity's going to grow a bit faster. Real estate about the historic average. Basically, the money supply is going to expand about 7% a year. Some assets are going to stay on that glide slope. Some will slightly outperform it, like equity, like Bitcoin. Some will slightly underperform it. That gets us to this forecast, which I presented in July of 2024. Bitcoin grows in my base case, 29% ARR up to 13 million a coin. I think it grows faster in the first 4 or 5 years. It's growing 50 to 60%. It's going to decelerate from 60% at some point down toward 2 times the S&P index. But you can see every Bitcoin you don't buy today is going to cost you $13 million. A lot of people think, well, the world's going to turn upside down. No, it's not. The world is not going to turn upside down. In 21 years, the world's going to look pretty much the same as it looks right now. There'll be a lot of real estate, a lot of bonds, a lot of currency, a lot of equity. There'll be a ton of trillion-dollar companies. There'll be $10 trillion companies. The only difference is if you didn't buy Bitcoin, you won't have made that money, right? There'll be a whole class of people that use Bitcoin as a capital asset. And the big winners should be Bitcoin and equity. As once you get the right asset position, Bitcoin's going to have $20,000 up days. You're just going to want to own it. You're never going to want to not own it. So this is what happens if you lever Bitcoin. What's better than Bitcoin? The only thing better than Bitcoin is more Bitcoin. Okay, and then the question is, did I pay 14% interest to get the more Bitcoin, 7% interest to get the more Bitcoin, or did I pay, in MicroStrategy's case, 82 basis points to get the more Bitcoin? If you borrow money for free for 5 years and buy $1 billion of Bitcoin with it, and if Bitcoin goes up 60%, your return will be higher.
Over the past 14 years, Bitcoin has proven to be a powerhouse, delivering consistent returns and outperforming traditional assets like bonds, gold, and even the S&P 500. With ETFs purchasing $5 billion in just 6 days, and Bitcoin reaching the 7th largest asset by market cap, institutional interest is driving unprecedented momentum. BlackRock's Bitcoin ETF has already outpaced their gold ETF, a market that's existed for 5,000 years in under a year. Saylor envisions a world where Bitcoin grows 29% annually, reaching up to $13 million per coin over the next 2 decades. With governments, companies, and institutions increasingly adopting Bitcoin, the shift is undeniable. The combination of strategic reserves, ETF advancements, and favorable policies could solidify Bitcoin's dominance as a capital-preserving digital commodity.
So petrochemical products are valuable. That's why oil refineries are worth the sum of their operations and their reserves. There's $300 trillion of capital in the capital markets. They can't buy Bitcoin. They don't want Bitcoin. They want Bitcoin with no risk. They want Bitcoin upside with no vol. They want double Bitcoin. They want 10x Bitcoin. They want something different than Bitcoin. So if you were to say, I think the oil company's only worth its reserves, say, okay, fine. We'll just blow up all the refineries and we'll all freeze to death. Implications into the war on crypto. It's one of the planks of the entire election. Lay out a digital assets framework, accelerate institutional adoption, modify the tax laws, make them much more favorable to crypto, to Bitcoin, to industry, to everybody, and a strategic Bitcoin reserve. All these things I think are implications of the red wave. They're all coming. Big milestones for Bitcoin institutional adoption, a repeal of SAB 121, the ability to create in-kind create and redemption of Bitcoin ETFs, options on Bitcoin ETFs, approval for solicited sales by banks, and acceptance of BTC as collateral for credit. Crypto renaissance. This is going to usher in a crypto renaissance. What is it and why? The traditional capital markets, they're failing the public. They're crippled by antiquated structures, and those structures are based on 20th century techniques. They're all obsolete, right? We're living in a world that was defined in the 1930s, and if you read Rothbard, he'll tell you that the 33 SEC Act was meant to create a cartel and limit access to the capital markets to just a few people. It was already a restraint of trade and an encroachment on freedom. In 1933, under the Roosevelt administration, it's just gotten progressively worse. Traditional capital markets are just too expensive. It's like too many lawyers. You want to go public? Too many lawyers, too many accountants, too much money, too many employees, too many years, too much revenue, too much of everything. It's just too hard. And if you manage to get public, if you're one of the 4,000 companies that goes through that and spends 4 years and $40 million and you get public, there's no liquidity in your options, there's no liquidity in the spot, you can't beat the S&P, you can't retain earnings, you're limited in the investments you can make by the SEC 40 Act and the SEC 33 Act, you're basically hamstrung, you can't take risk, you live in fear of missing the quarter. Capital is toxic, volatility is toxic, inflation is killing you. That's the problem. That's why 2,000 companies in the Russell 2000 are all struggling. Our current regulations, they require 4 years and $40 million to create a traditional security, but you could do something smarter, faster, stronger in a digital token in 4 hours with $40. And so the millennials, the Gen Zs, are looking at this and they're like, I don't get it. I could do something better and cooler in 4 hours. Why do I need armies of lawyers and accountants in order to do something which is worse, right? And that is the driver behind the crypto renaissance. So what are the assets? A digital commodity, an asset without an issuer, backed by digital power. That's what Bitcoin is, a digital commodity. A digital security, an asset with an issuer, backed by a security. Not complicated. Equity, debt, derivative, something tokenized a digital security, a digital currency, an asset with an issuer backed by a fiat currency, stablecoin, Tether, Circle, straightforward. A digital token, a fungible asset with an issuer offering digital utility, something useful in cyberspace. An NFT, a non-fungible asset with an issuer offering utility in cyberspace. Again, not complicated. ABTs, asset-backed tokens, an asset with an issuer backed by a physical asset like gold or oil or corn. There you go. Those are the asset classes. Those asset classes could be hundreds of trillions of dollars.
Michael Saylor emphasizes that Bitcoin represents the future, a digital asset that transcends the limitations of traditional markets. The coming red wave could bring policy changes that accelerate adoption, enabling institutional players to fully embrace this revolutionary asset. For investors, the message is clear. The window to secure Bitcoin at today's prices won't last long. With its limited supply and growing demand, Bitcoin's rise is inevitable. Stay informed, invest wisely, and position yourself for the wealth preservation revolution led by Bitcoin.